What is up, man? What a crazy week last week and a crazy morning already for sure. But you guys, I have a buddy here and I'm super stoked. um, would everybody welcome him? Ready, Sharky? If you guys don't know, here he is. Boom. The man, the myth, the legend. This guy, I don't know. When did we start? We ran into each other on Spaces. Oh, look, Shark. What a G. Already posted on his Twitter. Is your mic on?
Yeah.
Boom. There he is with the double face reveals for the guys. I love it. Probably like multi streaming. But appreciate you hopping on, man. Absolutely love the support. Usually we do this every Monday, just to kind of like get a feel of what's going on in the market and kind of like major headlines. Ooh, let me get this off. We are bouncing all over the place. Major headlines. What we're looking for. For the rest of the week and kind of things to lay out. So a handful of different things. I think what I'm going to start out with here, let's just do this. Boom. And Sharky, if you have any, look at Patrick, nice. If you have any stuff that you do want to go over, just totally interrupt me and it's all good. But again, if you're new, welcome. We'll give everybody a couple minutes to hop in. We are on YouTube. We're on Twitter. Some of those like viewers won't show up, so it's all good. Appreciate you guys' support in either platform. Oh, and I think we're on Twitch also.
On Twitch.
Yeah, Twitch. All the boys. Yes. Love it. Appreciate you. Awesome. Very cool. So every Monday, I like to do this a little bit earlier, to be honest. I hate Mondays. It's probably like, not probably, it is literally the worst day for me to trade. So, and when I used to do my preps, I would prep on Sunday and I would just always get so frustrated, like do all my charts, everything's set up. And then Sunday comes around and I'm like, everything hits targets or is invalidated. So I ended up doing this mostly Mondays. And the idea is essentially just like any other job. We'll have our Monday meeting. If you're in corporate, grab your Monday meeting, hang out with the crew, and then kind of line up what we have in store for the rest of the week. And that's exactly what we're doing here. Just kind of approaching trading like any other job. So that said, really just want to hit what are the major data points that we saw last week. And most of it is going to be over economic stuff. I mean, we had a brutal weekend, and I almost like when I was
the U.S. and Venezuela in
sorry.
talks for
when I was starting to do this earlier, it was like, do I really want to be talking about stocks at all after what's going on? But
right, very
yeah. The truth is, like, this is our job, so it's like I still have to go to work and we have to do our job. But that aside, that's all we're doing here, right? So looking back at the data last week, we got JOLTS, we got ADP, we got NFP, we got a ton of different stuff. And honestly, a lot of it came in completely different than what was expected. And when you look at economic data, it's not about what things came out, where things came out compared to where they came out prior. It's all about how far away from the quote unquote consensus is at the time. And two things to me were really standing out. Number one, like ADP. So ADP is like notorious right now for being completely wrong. But I think that was Wednesday. Let's just go get into this really quick.
I think you made a great point, though. I wanted to chime in, just talking about how this is, work and job and kind of that Monday meeting. So this is really cool. And I like that, especially if you're taking Mondays lighter, just to kind of have a fresh landscape of what's going on. Not going to be trading much anyway. And I think that's kind of just a great analogy. We treat this as a business. We're not trying to, gamble and things like that. Just being prepared and having that framework.
I think a good reset too. I think I was with another group last week and we were doing I did a couple trainings on NFP because I think a lot of people know that like I base a lot of my levels off of what I call like a fundamental event. So to me, non-farm payrolls is like that number one fundamental event that we get every single month that determines the trend for the rest of that same month. And it's the same, but sometimes when we get those NFP prints, like those actual numbers, they're huge movers. And last Friday was no exception, right? So we actually moved the length of almost week and a half within that single session, on Friday. Like, what a reversal, number one. Um, I did not catch the move. What sucks too is like I knew like if we get this kind of move, I have to make Friday count. Like Friday has to count. Like I have to make it count. And like I did not flip fast enough. And I looked at it. I took a quick revenge trade and I was like, oh, I exited for a small and I was like, oh shit, that exit on my short should have been my long entry. And I'm like, okay, that to me, that's my yellow flag. Like, okay, you're a little detached from the market here. Maybe take a break. Don't revenge trade it because I'm in that mindset of make Friday count, right? So, yes, we needed to make Friday count. Today, I was not expecting this kind of move. I'll be honest, right? Like with the bond market closed today.
Yeah. Well, this reminds me, yeah, totally. And this reminds me, I think we saw a very similar situation on Friday of what we're seeing today. Not as powerful, of course, but you know, the NFP number came in a little hot, right?
Well, a lot of hot actually.
Yeah,
so
yeah. And then, you know, but we've been talking about this and alluding to this. You don't really want to be a new money short down at these lows. You know, we kind of did a quad bottom, and then it didn't take much for the bulls to push us over, and then really to catch those late money shorts off guard.
It was a squeeze too.
Yeah,
I was watching that intraday point of control, and it shifted like boom, all of a sudden from like at the lows in the morning, and then it just flipped, and you're like, okay, probably extension. But I didn't want to take that. I didn't want to take the chance Friday on going long. Thankfully, I didn't.
Oh, I know. No, we were chatting on it. You're like, I feel like it's chasing now, you know. I said, yeah, I totally get it. I mean, it's hard, and you know, those trend days can be tricky because you're always like, and it's happened to all of us as traders, right? Before we think it's a trend day, maybe we maybe bend the rules a little bit, chase, or we get in, and then it just totally reverses. You're like, am I buying the top? Am I buying the top, or am I shorting the bottom? And you don't never know.
And honestly, like we've been making so much the last, I don't know, 4 or 5 months, something like that, shorting. It's like, how do you really swap that mindset, right? And so as a swing trader personally, I know you're a day trader a lot, Sharky. So maybe I'll just say for me, it's a struggle on a daily basis to battle your own personal like directional bias, right? And so maybe I'm speaking to some people, maybe I'm not, but that's part of the journey, right? Like you know, in some of these things we'll talk about like the 80-20 rule, like 80% of your results come from 20% of your actions, right? And it's, I think, similar in trading, right? We're like, yeah, maybe Friday was one of those days that could have been that 20% of your effort that produces 80% of the results, but doesn't mean that there's not another one coming. And I think there's another one coming this week, but at the same time, if this really is a reversal, I mean, this is clean, right? And so again, looking Friday at the close, you're like, okay, this looks clean. Like it almost looks too clean. Like right off the 200, tagged it to the penny, right? In a couple of times actually in the pre-market. And I'm like, bonds are stabilizing, the dollar's kind of dipping, you know, oil's pulling back, right? Like you want to jump in. I'm like, but every time I've done it, I'm like, a little hesitant. So I think at least basing out this week and then being able to like make cleaner decisions from here using those non-farm payroll levels, which we'll outline today. I'll show you like this is how I do it, right? It's not about that day. It's not about that Friday's price action at all. Actually, I don't take any directional cue off the actual non-farm payroll intraday price direction. Or price action. It's all about how this week digests Friday's move. And so coming into today, right now, we opened below Friday's low. We're closing just barely over Friday's high. I still think it's up in the air, so I'm not quite ready. But once we have a clean, like full open and close above, I'm ready to roll, right? Like I'm ready to roll. I'm not thinking shorts whatsoever. But until I get that, I'm a little bit hesitant, a little bit on edge. Yeah. But so one thing about so the title of this, right, is good news, really good news, right? And this is why I got a little caught up on Friday, because I'm like, okay, in very basic terms, right? Like if more people are going to work, that's what this non-farm payrolls number represents. It's how many new jobs were taken. It's for September's month. How many new jobs taken in the economy, right? And if more people are going to work, then more people have money to spend and they'll tend to spend a little bit more. And that's bad for inflation, because inflation is, it's not about the money supply. It's about like velocity of money. How much money are people actually spending? And if they're going to spend more, well, then that's tough for inflation and gives another reason for Powell to continue to raise rates, or at least keep them higher. And, back to, I think it was one of the highlights, right? Like we have a ton of Fed like speakers this week and last week. Fedmaster again talking about a chance of a November rate hike. The bond market, or the CBOE Fed Watch tool, doesn't believe it. At least the market's not pricing that in whatsoever. So I'm like,
it seems like it's on track for a pause. That's what it's showing.
Yeah. At least something like that. But I had. Let's see. If you don't know how to do this, you can pull up like actual NFP reports just really quick. But so when I looked at it later,
hold on, do we have a nerd alert? Nerd alert.
My bad. Yeah, a little bit. Bit of a nerd, right? But just if you don't know like what's going on, right? So when you look at the actual report, it's like very little change in terms of unemployment, right? Let's see. So unemployment held, right? 3.8%. So we got new jobs, but the unemployment number didn't change at all. And so this is the question: did good news really turn into good news? I'm actually gonna challenge that, because when I looked at it at a second time, I almost looked at this as not so good news, because when you look at where everything ratio unchanged, little change, very little change to the actual workforce. And so when you look at the data, where did it come from? Where are these extra 100,000 jobs coming from? But it's all right here. So it's basically people that were not working, but like already on kind of like this, like unemployment, things like that. This is where it came. And where did they go? They actually, let's see, I had it. So workforce participation rate, zero change. So how do you get an extra 100,000 jobs when the participation rate didn't change whatsoever? It is right here. So it's all right here. Almost 100% of the change came from private service providing sector, which is like your restaurants, that kind of stuff, retail.
Right, yeah, service.
It could be seasonal employees. And at the same time, when you look at the rest of the report, it's like, well, what else was there? I think I highlighted a couple things. Average hourly earnings, right? What would be like really good? People making a lot more money, working a lot more. It's not happening, right? So like in general, like they're not working more hours. It's completely unchanged, right? Are they making more money? They made, what is that? 7 cents more, right? So then the question was like, well, are these second jobs or things like that? Kind of looks like it. So it's constructive, but it's not like, oh my God, it's the greatest news ever. So I keep that on watch, right? So like, if
keep that as
really does become good news, then yeah, maybe there's a bit of a change in the what's the word, in the narrative. And on the outside, it really looked like that, but it wasn't. Like all of it came from that services sector. So that's a touchy kind of sector. It could come and go pretty quickly. So we'll see.
Right. And I think I actually did read in a report or so, I can't remember. Maybe you know better than me. I know you've got a little bit better of a pulse on this type of stuff, but I heard that a lot of the jobs there are seasonal and part-time work. So it's not really that they're getting, full.
Yeah, it's like, restaurants, restaurants and that kind of stuff. That's really what it was. I mean, if you look at each of the other sectors, like there's not a huge, the construction, small changes actually to the downwards, manufacturing a little bit, but they're pretty much stable, like across the board. It was just this one. And I mean, that's a massive outlier, right? So it's all coming from this sector. So what does that look like moving forward? What's true is that this is a lower paying sector. Unemployment rate's the same, so it's not like they're new people coming into the workforce per se. You'll probably hear the narrative of it's a lot of people taking a second job, right? And honestly, that's what it could look like, because you're taking a second lower paying job, which means that it might not be that much better out there. So just beware, right? But those type of things, like when you're looking for the change, right? You are looking for that change. Could this be it? It could be. But now it makes sense, because like immediately what happened with the market, right? So like Friday, when we're looking at the market, let me pull the screen over real quick. This is SPY. I'm just going to use this. So this is right here where we got our actual data point, right? Like right here on SPY. So non-farm payrolls comes out, and what happens? The market reads the headline and it's immediately a dumpster fire. And then you have a couple minutes to look at this vapor. You have a couple minutes to reverse it, right? And or to read the report, and you're like, okay, well, it's not as good as you were thinking. Maybe it's more people taking jobs, which, remember, if bad news is good news, that actually makes more sense to me why we would rally now. So it there's this narrative like, yeah, it could be, but the jobs that were added, they were the lower paying jobs, and the unemployment rate didn't actually change. So that said, what do we have on deck for next week? Right, today, tomorrow, we have a bunch of speeches, pretty much in the clear until Wednesday. So Wednesday we get some nasty stuff. Just be very, very careful. Right, Wednesday we get PPI, Producers Price Index. Here, let me see. We got a couple of questions. So, Paper, how are people that are striking accounted for? So, good question. When we look at the different types of reports, so there's ADP. ADP does take into account people that are on strike as employed, and I believe you can see this in manufacturing, motor vehicle parts. These guys are actually going up, and manufacturing was stable. So I'm not sure on this question. I know for sure the ADP counts them as employed. I don't know if the NFP report actually counts people on strike as employed or not. And they may, I think they may not. But it'll show up here, right? So like on this motor vehicle parts and probably manufacturing. But you can go back into this. This stuff is like super detailed. Sharky wasn't joking, nerd alert, right? Like you have to spend a lot of time, which I don't. I'm not an economist, so I'm not going through this entire, I don't know how many, 39-page report. But if you guys want to, by all means, just Google NFP report, and it'll take you to really just this download, and you can grab it pretty quickly. But anyways, so that said, we get PPI Wednesday and the FOMC minutes on Wednesday as well. Both of these two things are market moving events, definitely. So PPI, if you're not familiar, Producer Price Index. Both of these are indexes, right? So Wednesday and Thursday, CPI, Consumer Price Index. That's the actual inflation output. What has happened, it is a backwards looking data point, but it is absolutely, both of these are market movers. Typically, PPI leads CPI. That's how much the producers are seeing in their inflation. And the question becomes, are they going to pass it down to the consumer? So if PPI is high, the market might be potentially like a little dip. And depending on what's going on with this FOMC stuff, right? Because that's when we're going to get into, do we, and let me see if I have, here you go. Here's a Fed Watch tool, right? The Fed keeps talking about possibly raising rates, and honestly, the market is not believing them, right? So this is just where's the market pricing in rates for January? I believe we're here. There's still, this is like 70% probability of a rate cut, or no, this is stable. This is right where we are.
The hold. I think that's what the market. I forget the chart I was looking at, but there's one that gives you an idea, and it's indicating hold. I'll have to look it up, and I'll get back to you.
Yeah, I mean, this is the one I use. It's pretty simple. It's just CBOE Fed Watch, but it's essentially what the market is pricing in today. We're here, so it's a 12% probability that we'll be at the same place, in July of next year, and 30% probability, 25 basis points lower, and another 30% for 50 basis points lower. So they're pricing in like 2 rate cuts now. So when I think about, when you look at that NFP data, do they really think that it's people taking a second job at a lower paying rate? Honestly, that's what this looks like to me, and that I can kind of wrap my head around. But not that it really matters, because we'll show you guys a trick that you don't need to be economists. You don't even need to pay attention to this stuff to be able to just trade your trend. And that's probably the beauty of just being a trader at the end of the day, not getting super wrapped up in a lot of the fundamentals. There's a lot of smart people on Twitter and stuff that you guys can follow. And Wolf does a ton of great spaces that'll teach you guys a ton of that kind of stuff. But from a trading perspective, it's good to know about fundamentals. Keep them first and foremost in your mind, but you don't have to be an expert. We're just going to trade the trend for the most part. Thursday, we get CPI. So Wednesday, Thursday, potential little roller coaster. Friday, we have consumer sentiment. That's like how good does the consumer feel about the economy, right? It's not about like the market or anything. Like how confident is the consumer in their job and like spending money in general. That's what that number is going to look like, or going to come in on Friday. And then for any of the Miss Cleo fans, I did grab the
Here we
recap.
go. What does Miss Cleo have? Yeah,
Miss Cleo has been on point. True story. This is not me. This is somebody else's stuff. I don't really know them, so I don't want to put them on blast. But there is someone that does this stuff, and it blows my mind how accurate they've been lately. But anyways, their recap says Monday today is the final push into a Tuesday trend. So trend day tomorrow. That's what Miss Cleo says. Wednesday balance, take the day off. That means chop. Thursday struggle, maybe take the day off, and then Friday choppy waters, maybe capitulation. All in all, it is what it is. But there you are. That's the recap. Begin with the end. That's how we like to do it. And then from here, honestly, I'm going to give you guys a couple levels that I'm looking at. So Friday, remember, non-farm payroll guy, right? I take the day's high and the day's low. This is actually pre-market low. So I'm going to take the low after the market had the NFP number. So we know that the market got the NFP data right here, right? That's about 425. Immediately sold off. I'm going to take this low. Technically, it's pre-market low. You could probably take, 420 in general too, just as your barometer. Here's how they work, right? What matters is not this Friday intraday price action. What matters is, are we trending above or below last Friday's high? Right now, we're above last Friday's high. What I'm going to say is, if we're holding above, and I say holding open and close above last Friday's high, we're not thinking short. What's true is that this is going to determine the entire month's trend is 100%. Like it's not a little bit, it's a lot of it. Like it's totally accurate, right? In between Friday's range, if we're not over 431 for the majority of the day, which we're not today, but if we're not over the 431 for the majority of the day, think chop, right? Think chop inside this level, like inside that day. I'm not thinking puts. I'm just thinking trade to range. That's it, right? But if we do break below Friday's low, right, 419, call it 420, and we have one of those days where we open and close below, I'm not thinking long. I am thinking short. And that it's as simple as that, right? And that's going to be true from now until we get the next non-farm payroll number. And just so you see it, right? So like, where's another day? I think everybody remembers this one. Right. So this was August, right? Huge. And this is where I'm kind of like, huge non-farm payroll day, right? High and low. It wasn't until we had a clean open and close below this level, which was the following like Tuesday. It was like 6 days later that we really got the clear trend, and it was down, right? So it was down and we just went level to level. You can do this on any time. Like here's another one. We had what was this? July NFP, huge move to the upside, kind of pull back. But unless you're getting that clean open and close below, we're not thinking short, right? You actually get that clean. So Friday, Monday, Tuesday, this isn't until a Wednesday that you get a clean open and close above. And guess what? You're off, right? Yeah. You're off and you're just trading level to level. However you want to do it, right? Here's another one, June. Big move, gap and hold. This kind of looks like where we are right now. But it wasn't until Monday, Tuesday, Wednesday, Thursday, Friday that you got your clean, okay, I'm all in the clear. Because we have this huge kind of move, sometimes it takes the market a few days to digest that move. So that's why I'm not trying to press anything super heavy right now. I'm still being a little cautious. In the meantime, I am still thinking kind of like dip buy potential. And on my charts right now, so this orange box, by the way, this is an average weeks range. So for SPY, this was like more than average weeks range just in this one candle, right? So if I took today's open, right, an average week's range on SPY, the low of the day, and this is nothing special, right? This takes us on an average week's range to 436. And 436, honestly, is like a beautiful target, at least for the upside. If we do continue, this is going to be, I think I've had this level on my chart for a while. It's going to be like a full close for right now. you know, if all things equal and this trend does stick, we should see that very quickly. And then it's going to probably be like a pause and wait, right? So for me, it's like a 436 right into this volume shelf right here, right? Like maybe extend up to 438, but we'll see. Again, we had a huge move on Friday that we do need to digest. But if I look at just Friday, there's one thing that I was looking at today. I actually took a short today, believe it or not. Like I felt good about it until I didn't. But there's a big volume shelf right here. So I say volume shelf. So it's a low volume pocket is what this is technically called, right? Just a low volume pocket. You want to call it fair value gap, whatever. Technically, we filled it in the pre, just barely. So I was really hoping to get this kind of, if I just drew a fib on SPY, this would take me right into like 325, 324 area. Again, if you get a dip by like, for me, I'm thinking right now, if I get a dip by in this lower half of Friday's range, I'm all about it, right? But there is this same order block, right, from the 26th that we saw. I think this was the first time we were thinking, oh, it's possibly capitulation low-ish, right? But what looks really good to me right now is actually just this pullback. If we get it in an open market, something like this to kind of like fill in and then go up. I honestly, I'm kind of waiting for something like this. I would feel a lot better about that type of trade. I don't know that this will come this week, but if not, you know, if we continue to open above here tomorrow, I'm just going. So Miss Cleo said it was gonna be a trend day. So I'll take essentially an orb for tomorrow. Tomorrow, hopefully, be a good trading day. And we're breaking structure. We're at least testing the current structure right now, right? So if we're still in this little box, right, we still want to be a little cautious. So this could be the whole box of consolidation. I don't know, Sharky, do you have levels of your own that you want to like pull up, or I could pull up really quick?
Well, I'm looking at that 433.75 area, which isn't that much higher above, and I don't know where, but maybe you can find out where it's actually lining up there on the chart. But this whole zone 431,
it's about this, yeah, right here.
Yeah. So I'm watching that area. Is really going to be very important to see if we can get over that for continuation. But, you know, from the bigger picture, you know, we could even set in a new daily uptrend, but still technically just be coming up from the weekly perspective to make a weekly lower high. So, you know, although we may have some short-term upside, you know, and it depends on your style of trading. Again, you know, this might speak more to you being a swing trader. You know, it's hard to get really any real conviction unless we really get over those weekly highs, you know, and create a new. So, you know, from the structural standpoint, we have to keep that in mind. You know, obviously it's different being, you know, day trading, and, you know, we take a lot, you know, smaller levels into consideration. But that also doesn't mean that we can't ride the short-term counter trend rally up maybe to fill. I'm still watching that gap up by 436. Now, I don't know if we'll be able to get into it, but I do think that there's the potentiality of us.
Oh, I think that's the red.
Yeah. Yeah, you could see it probably better on the daily, but
yeah, there's no trades. So I have this here, literally no trades between 430, 613 and 438. So yeah, that is a heavy fair value gap, let's call it, right?
Yeah, so I don't know. I think closing the gap brings us up to 439 and some change. I don't have the number right here in front of me. I am watching the market, you know, currently at the
basically moment, right? 438.30 is what I have. But yeah, that's the same gap. So we both have this call it fair value, right?
Yeah, so I don't know whether we'll be able to just come to the top of the gap and then we'll stall, or if we do make that attempt to actually fill it. You know, obviously there's just the tons of now geopolitical news on top of all the macro headwinds that we are still dealing with. So, but I do kind of have that either somewhere in that area as a potential short-term target where we may be coming back into. And if we do get over, I'm also looking at the double inside bar on the weekly back test of that from a bigger picture perspective as well. Yeah.
Oh,
So
these
up
two
there. Yeah,
right here.
exactly.
Yeah.
So
Yeah.
we
So
could come
like,
back to come into that area as well as another
yeah,
zone I can look
funny
at.
lineup, right? So that's my so PV laughed at me. He's like, "Do you really not have anything other than NFP lines on your chart?" I'm like, "Yeah, that's it." But yeah, it's funny how it all lines up, right? So yeah, so that's 442.64 on mine. Double inside week. Nice call out. I do like that. But yeah, and that could be, you know what? Why don't we do this too, since we're looking at it, right? If you are super bullish and you're kind of like want to take a stab at this, I think, just knowing, okay, so from this high here, just a regular retracement, where your bear is going to step in. So if I'm looking at taking a trade directionally, I always want to know where would the opposite party try to step in on me. It's not going to be until really that fair value pocket right there, that gap fill. So the 618 retrace from here to here, 0.5 retrace is 435. 618 takes you all the way up to 439. And I think there is like a hard session gap in there also, where like there was literally no trade. So I like that, and that actually measures up with roughly an average week's range. Um, Even like being able to extend it just a little bit, pull back and stop right there, right? Which would be really really good, just in general, right? Like this little structure that we're kind of coming out of. I mean, this
I
is
think that
construct.
daily gap also would line us up pretty much with the gap we were looking at would line us up with the daily lower high. So that's the first
Yeah,
one. The weekly lower high would be the inside bar, the double inside bar touch.
yeah, that's up at 442, right where this
So
big volume shelf is,
yeah.
right here, that little peaks
And
up here.
I love that, and I like to think about that too. A quote that I like to say. I don't know if I came up with it or whatever. Who cares? But if you want to be a good bull, think about where the bears are, what the bears
Yeah,
would be doing. If you want to be a good bear, think about from the other side. So it's always great to have that opposite, idea in your mind. And the gap fill is an obvious choice, for where we may be hitting, not only because of the gap there, but why are those gaps created? Because there's inefficiencies in the auction. So
yeah,
it also
your imbalances,
goes
right?
to say the market only has one target, and that's to seek out liquidity. So where is the liquidity? And then we map it out there through those different methods. And then obviously we never know, nothing's 100%, but it can give us a little bit better of idea of where the market may be seeking to retrace to then pick up more sellers than to go back the other way.
Yeah, I just, it's so if you've been around and you're going to stick around, right? One thing to be sure of is you don't want to just think that markets go in one direction and keep moving, right? So it's like markets run and then they rest, right? So that would be a beautiful spot to run up to and then take a nice little rest, right?
Mm-hmm.
And be able to regroup, right? Doesn't mean it's going to retrace, doesn't mean it's going to continue on. It could very well mean that it just completely goes sideways and you get a barcode, but
Right.
that's normal, right? That's atypical, right? Like it's not typical to see something just rocket ship in one way or the other. Okay, cool. So I think we have some good levels for you guys. Again, like that kind of like pullback. If we get something close to 424, right? It's like here's what I'm looking at. Where did sellers really step in also that might be trapped, right? So why am I looking 424? So here's where sellers actually stepped in. All of this, which was really like these guys here, they might have been covering out of the gate in the pre-market, but it's kind of like this level right here. So anybody that was caught short essentially down here, if this makes sense, if you're following, anybody caught short down here that's still there is going to want to likely just start covering pretty quickly. So that's why I'm looking like this would be a good value spot to go long, believe it or not. Down in this area, if I get any kind of wicks over here, I would, it might feel scary, right? It might be like, tomorrow in anticipation of PPI or CPI or FOMC, right? It might feel scary, but that's honestly, that's going to be a better value long, especially if you look at this type of accumulation. I'm not a breakout trader, right? So like if we do break out, right, or something like this, we'll usually get kind of a pullback into that liquidity zone right here. And so that would be to me like a really good area to get a shot to go long. Do we get it? I don't know, right? And if we just continue on tomorrow, I'm going to take that. But I have that in the back of my mind. Honestly, that's what I was trading for this morning. Didn't get there. Ended up bouncing pretty quickly. And I was like, my NFP level is 428.75. Below that, I'm thinking short to that kind of like low volume pocket. But once it reclaimed, I'm like, no, we're likely going higher, right? So now it's just level to level, likely higher from here, likely higher from here. I'm not thinking this unless we're below probably this October, Friday's low, right? Could we get that tomorrow? I want to keep that level on the radar, right? So not today's high, but Friday's high for tomorrow, to me, is going to be a trigger short if we get below that. If we can't hold that. But if we can, let's say a 30-minute orb, give or take, something like that, I'm going to be Sharky and I going to be looking for that 436 probably type of level. But anyways, one thing to note. So there's two things. So the broader trends, things like that. The dollar is going to be super important, right? So I've just got a 30-minute candlestick chart. I like to use a 30-minute chart just from my analysis view. This was the breakdown last week, and this actually happened before we got some of this data. We got our NFP data spiked right up to that resistance, which was now resistance. So resistance here, popped up through, pull back, and it looks like we're kind of trending downwards in this general area. This looks like it's ready for a pullback. If this continues to go down, I like that. Anywhere below 100, it's not going to have that big of an effect or impact on the market. So I'm only looking at the dollar when it's this high. That's when I think it has a real effect on the market short term. But if it gets too low, it's not going to be that relevant. TLT. So TLT is the bonds, right? Inverse to the yields. So TLT going up means that yields are going down. Again, that's actually good. If there was one thing that's going to give this rally or this possible reversal legs, it's this guy right here. So if you see TLT breaking levels, which it's not yet, if you do see it breaking levels, then I mean that's more confluence for any upside type of move. Again, FOMC minutes on Wednesday. A lot of stuff that's gonna really affect this guy right here. So watch TLT, how it reacts on Wednesday. If you don't know what the minutes are, it's essentially just their notes from what they were talking about in general.
The previous month of the FOMC.
Yeah. Did you want to go over oil at all, Sharky?
No, I was just day trading it with the with the news today. So
it's an interesting situation right now. I think this is more about global headwinds. Yeah. Obviously, with what's going on and is that's going to affect this. That's why we had a lot of the pop. Does it stay? I don't know. We'll see. But one trade for me for sure that I'm actually looking at now is if the dollar comes down, there's been an absolute horrible downtrend in gold. So if the dollar goes down, that's really tied to gold quite a bit. One sector that's totally beaten up is GDX, which is the gold miners. Maybe even gold, the underlying asset, just GC, this is gold futures. GLD is the ETF. And then there's, I think it's UGL, I believe, is a 3x leverage. Yeah, look at that. UGL is a 3x leverage gold ETF. But just to note, right? So if the dollar does come down, that's been keeping gold down, right? If you're looking at gold, in general, this chart, this is a massive consolidation up here. This is a pretty basic pullback. But the pullback stopped at a perfect spot to lock in a higher low, actually, after continuing to kind of try to break structure. So, is this the spot? I don't know. It's a good spot to me. It looked really bad these last couple of days, but this is a huge move. Then if you're looking at the ETFs, this is GDX, the ETF right here. This is NEM, Newmont Mining, things like that. These would be some stuff that's not going to be really affected by NFP itself. It's just, it's the dollar, right? So if the dollar continues to pull back, these are probably really good spots just in general for this kind of ETF. And again, it's very similar. So you have your consolidation, right? And if I can get a wick into this prior accumulation, so you break out, not a breakout trader, but the big money entry is right here. It's not up here, right? It's you get a breakout, you get that liquidity grab down here, lock in a higher low. Did I lock in another higher low? I don't know. but keep it on watch for sure. I have one stock that hasn't broken out that I'm really kind of interested in. So if the rally is real, I'm looking at Shopify, man. Not gonna lie, this is Shop. It's very similar, big consolidation here, right? Right at what? This red line is my 200-day moving average. Bounce, 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 higher low, looking like it wants to break structure. What do I need to see this go down? I need to see IWM, right? So IWM's been the biggest beatdown sector. It will have the higher beta moves, so it will be a higher moving, like ETF in general. This one looks even a little bit stronger than SPY right now. It'll look a whole lot weaker when it's going down. It'll look a whole lot stronger when it's going up. An average week's range on IWM, just saying, right? This actually takes you all the way up to 182. Believe it or not, that's average. So there's a lot of room on something like this, just now starting to break structure, right? If we can hold, what is this level? We can hold over 170, call it 174, call it 174.50 just to be safe. That actually looks really constructive. Nice, like low volume pocket to fill in short order over 177.75. And then yeah, my pick. Yeah, it's a heavy watch for me. This is pretty coiled. So if this can really press up, that's going to be a big move. If we get it, I need to wait for a stronger trigger. Don't have the strong trigger right now, but that target would be just under 60, targeting somewhere in between that 50-day and 20-day, somewhere around like 58, something like that, which is probably 5-10% higher on this stock, on a single stock.
Yeah, it can move too when it gets some momentum.
Yeah, it's a mover. It's a big mover for sure. And it's not like it's a broken company or anything like that. I think it was 2 weeks ago, by the way, if you were watching, we did say, hey, that was a time like the end of September to do your DCAs, just from a timing perspective. Good job if you did. If you haven't, maybe take a look at doing some of that kind of stuff. I know that's more investing than trading, but just my PSA, not financial advice, I guess. I'm doing it. How's that? Other than that, man, this looks constructive. I don't want to get faked out though. So I'm going to wait for tomorrow really to have like a really clean read. Hopefully I do get one. Oh, I did want to have on the Qs. It's actually a little bit better. So here's an average weeks range. We did not move an average weeks range on the Qs. This orange box is an average weeks range. There's more room on the Qs. I think this is a bit cleaner.
Yeah, tech's really been surprisingly holding up way better than, and I think I was making a joke with somebody like consumer staples was just getting murdered and tech looked better on a lot of fronts. And I'm just like, well, who would have thought, in this macro environment that we'd see consumer staples getting crushed and
I know, right?
Holding the bid.
So oops. Well, that means it's power. That's my power hour alarm. So here's our level, right? 360, give or take, on the Qs. If you can pull this back all the way, right? Like that's going to be your kind of like line in the sand right now. So 360 to 370, there is a nice little low volume pocket also. So that's all the way up to here. We are kind of pressing over that. So 365 is your midpoint where we are right now. This is going to line up very similar to SPY, but this is a very low volume pocket that could be quickly filled also. Maybe not today, maybe later on. But I'd be watching that 360 to 360 kind of like snipe. If you get the opportunity, don't know that we will.
Big sellers coming into the market here, big volume.
Yeah. This is why I don't want to get faked out on this kind of like not swinging today, by the way. But if we get these pullbacks, Sharky swinging short. I'm just telling you guys right now. Anyways, we get these pullbacks
right now in the market. I don't know. I guess.
Yeah. If you see that bounce around 360, just know that's going to be your key level. And so like that's right here. That's this kind of like shelf. So on the right hand side of my screen, you see this kind of like small little mountain range. That is the level that the bear or the bulls must defend. All this consolidation, this battleground right here. If we lose 360 in a convincing way, be really careful. But this line, it's a very tight line all the way across. It's pretty good. That's pretty constructive. So if I get a shot around there, great. If not, just know that as long as it's over this right now, this is looking a bit trendy. It's like by the way, so this is Friday's NFP October NFP high 366 on the Qs. It's also happens to be July NFP low. So it's kind of like double strong type of spot. So it could be a quick move, maybe something like tomorrow or really hard rejection. So just be careful. If you do get the rejection tomorrow, watch that 360 level. That's for me. All right, man. Well, I appreciate you, dude. Let me see. There he is. Boom. It's been awesome.
Yeah, man. Thanks for having me. I'll stop by another time.
Oh, sure. Yeah. Look at this guy. Miss Cleo has been on fire, right?
Yes.
Yes. Right. GDXU. Yeah, GDXU. I'm probably going to pick with, somebody got a request on Netflix. Can I do a Netflix really quick?
Do it for the people.
I'll do one. They all look constructive, right? We just went over the Qs. Qs is going to be generally good. Yeah, it's super, super similar. First bounce, here's what I'd say. Off the 200-day, a lot of times you're going to get this first bounce. We can pull up any chart you want. This red line is the 200-day. First bounce isn't always the one that's going to be the best, right? If we pull back and you look at historical stuff, a lot of times you get this kind of big move. So coming into 200-day, bounce up off, only to kind of be pretty disappointed later on. But this disappointment is the real buy right here. Yeah, any chart you want, it's all going to look very similar around that type of level. So, well, we'd have to go pretty far back. It gets really choppy, right? So bounce, chop, bounce, fail, come in. Big bounces usually off the first one, right? But we want to see like that really trend away from. That's what it's about, right? Is your moving average like sloping up or down? It's still sloping up. I think these guys will all start to kind of consolidate. It may be nice, kind of like scalpy type moves, but once these guys get really close together and your moving averages get real squeezy, then you're going to be off to the races in whatever direction. Anyways, that's it, guys. Shark.
All right.
You're amazing, dude.
Great talk.
I love it.
We'll do it again.
All right, guys. Adios. Peace.